Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Week Ahead Iran War Edition. That is the number one market driver in the world right now is the U.S.-Israel-Iran war. Today, we're going to look at our latest odds on a ground invasion. It looks like it's becoming more and more probable that you're going to see a ground invasion at some point in April. I think it could be coming soon, sooner rather than later. The crude oil prices definitely reflect this hypothesis. I think you can look at the markets, take one look at them, and you can see that things are in disarray. And that energy relationship, that point, that correlation where you have energy on the rally and stocks coming off, not really holding true today. We've got big rallies in Brent crude and WTI crude, but also you're seeing a little bit of strength in stocks. But I have to tell you, if I was a bet man, and I am, I probably would be shorting right now, going into the late session, just because the Dow is giving back about half of its gains. The U.S. oil and the U.K. oil really are being the number one market drivers. They're huge drags on really the global economic projections and what we're looking at moving into the future. And I think that more than likely we're going to get into a situation here very soon where we're going to be talking about ground troops. We're going to be talking about the energy markets almost exclusively, because in many ways that's all that's going to matter for quite some time. It's going to be how fast can you get crude oil down? How fast can the United States ramp up production to maybe offset some of the shortages coming out of the Middle East? Now, we had Baker Hughes rig count last Friday. I'm going to spend a little bit of time on it because it was a horrible number. I'm not really sure what's going on the domestic side of things. It looked like they were ramping production way up here in the States, and this rig count says otherwise. So I'm going to have to go ahead and take a look at that. That's from last Friday. Also, we had Jerome Powell made a few statements today getting involved with what he thinks about the interest rates, and it wasn't good. We have a bullish U.S. dollar. We have bullish crude oil, and we are in a significantly different situation than we were 5 weeks ago. No question about it. So I want to welcome everybody back to the room. Jason Max, good to see you. Sup, Jason? How are you doing? Tina Jean, good to see you. Tina, welcome. Lewis, good to see you. Lewis. Let's see, Andrea Garwal, Ralph H., everybody over in the How to Trade community, Bobby, Bob, and also Tuku. Good to see everybody back in the room. Let's get started with the volatility index. This is, people talk about how do you want to approach a trading day? What do you want to do to trade? And you have to do so many different things. You have to be a strategist. You have to know a little bit about fundamentals. You have to know when the volatility is likely to be there. One of the things that's just routine for me, that's an old hat, is VIX, looking at the VIX. I've talked a lot about the VIX lately because it's very important that we understand not just what's happening right now today in the market. Anybody can pull a US 500 chart and say, okay, we're up 0.5%, sort of strong. Not really that strong, though. We can all do that. That's not hard to do. What we can't do is really read the future, know what's going to happen in the future, and that's what the volatility index does. Remember, it's always forward-looking. When we look at our markets, most traders and most derivatives traders, they're looking towards the future. They're not thinking about what's happening right now. They're thinking about what's going to happen tomorrow, the next day, next month, next week, next year. That's what they're thinking. So the volatility index is derived from those deferred month S&P 500 options premiums. When those premiums start jumping around and going crazy on those options contracts, the VIX goes up. That signals uncertainty, and that's what we call implied volatility. And so what we're looking at doing right now when we look at the VIX is not necessarily to figure out where we're at right this second, although it does help a little bit in that regard too. Where are we going? We're elevated right now. We're at a risk. I mean, if we were talking about, is it a red alert? I wouldn't say it's a red alert. It's probably maybe an orange alert. It's not. We're not at DEFCON 5. We're probably at DEFCON 2 or 3, but we are elevated. So you're looking at about 30 and a quarter right there as an elevated level in the VIX. 30 is a big deal. 21, the long-term average, the LTA, that's a big deal. As far as our highs go, we're not even close to being in a panic type of a situation. We really aren't. We're not. And you got to look at the long-term stuff so you can really put this stuff in perspective. Are we elevated? Yes. Is this a COVID type of a scenario, a world-ending type of a scenario? Not really. Not really. Not yet, at least. And you can see right there, there's COVID elevated levels. You can see how active the VIX was back then. And then you come in here with the 1st of August, 2024. I believe that was a situation in Japan as well. And there was the tariff panic of last year. I keep referencing the tariff panic because it really does show how bad things were last April with regards to fear. Is this April going to be as bad? Do you think that we're going to go up maybe and get involved at the 50 or the 60 VIX level? There's scenarios out there that suggest that could absolutely be the case. And we're seeing really where worlds collide, where the fundamentals collide. We're watching in real time the energy markets dictate what's going to happen in the money markets. And it's big. What's happening here is really big. It's really significant. You're going to see everything from mortgage rates get hit to the price of your groceries go up. That's just the way that this looks like it's going to pan out. Now, we're going to speculate a little bit on this live stream. We're going to talk trading. We're going to talk trade ideas. Of course, I'll answer any questions that you may have, but we are going into something that I'm not trying to hype it up, saying stay tuned and be scared all day, every day. I mean, you live your life as you always live it, but you can see that this war is not going the way that a lot of folks thought it was going to go early on. If you told me that we would enter week 5 and the Strait of Hormuz is still closed, no matter what you're seeing in the media, those oil prices tell you that the strait's closed. Now, you're letting a few tankers through here and there. Those tankers are going to Asia. All right, those tankers are already spoken for. They're going to Iran's allies in Asia. That's where they're headed. And the global stress that this is going to put on the energy markets. I talked to folks in the UK. I mean, a lot of you are in the UK. How's the gas situation? Are you starting to see shortages? We talked to folks in Australia. They said they got shortages. The Philippines have gone state of emergency with saying they have 40 days of fuel left. So this is going to be a thing. This is going to be a big thing as we roll forward in time. So think of the opposite of COVID. Think of the opposite of COVID, where COVID was sort of there was plenty of fuel. It was a global lockdown. Nobody left their house. What happens when the global economy has to function, but there's no fuel to function on? It's almost an inverse COVID. So what's happening to our expectations? The dollar's way up. And a lot of that's on the back of what Jay Powell said today, but a lot of it because we're going into the next phase of this war. And right now you're seeing money just pile into bonds. You're seeing the yields. We're going to talk yields here in a minute. A lot of cash, not necessarily coming off of the sidelines and getting involved in the bond markets, but a lot of cash is coming out of stocks and coming out of things like metals and going into those bonds and actually betting on the dollar to churn higher here over the next 6 to 9 months. That is incredibly difficult, what we thought, or incredibly a 180, completely different than what we thought was going to happen in January. I am the first one to say it looks like I missed this one badly. Didn't see a world war coming. Didn't see it coming. And right now you're sort of on the precipice of the world war. Over the weekend, what happened? Saudi Arabia got involved, said they are going to join the fight. That's interesting. Also, the Houthis. The Houthis said they're going to come in on the side of Iran. Now, the big question is there was some facilities hit over the weekend. I believe it was in Saudi Arabia. A lot of folks are saying that Russian intelligence gave the coordinates of the air base there in the hard targets, the target surveillance information to the Iranians to shoot the missiles. Now you start to see what's happening. It's called an escalation ladder, and now all of a sudden everybody's starting to get involved. China's bulked up their assets, their military assets in Taiwan. And if you're from these regions, feel free to drop any knowledge you have inside the live chats because I'm all ears. I want to learn. I know that a lot of things are happening here that we have no idea about, and it's going to be an exciting time to be in the markets. It's going to be a dangerous time. You can make a lot of money doing this. There's no question. The volatility is going to be there. You can make a lot of money, but you got to be safe about what you're doing. So if you look at the dollar index right now, 101, it looks to be the next port of call. We're trading right around 105, about 150, so 147-ish. We're right around this level. This is make or break for the U.S. dollar right now. If this level does not hold, as topside resistance, then we're going to rotate much higher. I expect if we do break above that zone, you're going to see some major moves potentially up to that 104, 105 area, and that really speaks to the world, the investors going to the U.S. dollar as a safe haven and also jumping on some of those yields in the bond market. Basically, it's cash coming out of the markets and going into things like bonds. It's fascinating what's happening here. It really is. So we're going to keep a close eye on the dollar because the dollar to me is very, very important, and it's been a non-factor. The dollar was sort of devalued, trading right around between 95 and 98. It did that for seemingly ever since we got this big plunge back in last June after the big tariff, Independence Day, the tariff panic. Well, what happened then? We went sideways, and now we're breaking to the top side, looking at 101. That's a big deal. I mean, mark it down, right down that level. That is a big deal. We're watching the dollar closely because as the dollar strengthens, it's going to put a tremendous amount of pressure on stocks. And as long as energies stay high, it's going to put a tremendous amount of pressure on stocks. It's going to be really difficult to get those big breakout trades, those swing trades, for the big money that really were there for the last several years. Fascinating stuff, that's for sure. Babji's, good to see you, Bab. Welcome. If you guys have any questions at all, be sure to drop them in. The things we're talking about are very complex. They're not very happy either. We like to run a nice happy stream. I don't like running heavy streams. There's too many of those out there. But, it's something that we got to be aware of. The war is driving everything right now. It is the straw that stirs the drink in everything. So what we've got going right now is Switch Markets. They've got some new bonuses that just came online this week. If you're a new trader, be sure to head on over to Switch. Check it out. Thousands of global markets, commodities, currency pairs, whatever you want to trade. They've got it. That's on your MT4 and MT5 platforms. We've got some strategy stuff out that we've covered a lot. We're going to talk more about that later in the week, but it is going to be an interesting week to be on the markets. There's no question about that. So if you need to trade, head on over to Switch. They'll get you up and running. It's very easy to deposit there. I was told recently that it's almost automatic now with sort of that reverse KYC program, so you don't even have to really wait. You can get in there and trade, I think, up to $2,500 just on the finger. So that's something there. Definitely get in there. Check that out. But as far as from the educational standpoint, when we talk about how to trade, you better know how to trade volatility if you're going to dance in these markets. I'm not trying to put anybody off. There's a lot of opportunities in here, and we're going to go hunting for them. We're going to get them, and we're going to cash in. But this is one of those market environments that I can't stress enough caution. The taking positions is really difficult in this stuff. You're not getting the clean breaks that you got on U.S. equities really for the last year. Those orb strategies are challenging at best. They're challenging at best right now because of the news. It seems like every hour there's another news item that breaks the markets up and breaks up momentum and really throws them into a state of chaos, state of flux. So keep a close eye on what is happening. We see natural gas is off about 6% today. We're going to take a look at natural gas here in a second. We did have a big-time level that may have come into play. I haven't checked gas yet today. I've been just infatuated with WTI crude oil. All right, let's get on to a trade update. We're going to hit on this one briefly because I do believe it's going to go here relatively soon. Euro Australian dollar sell right up here, 38%, right on 169.05. Pretty good stuff. if you're interested in sort of getting away from the U.S. dollar and trying to broaden your horizons or diversify your holdings and your trading approach, Euro Aussie is a pretty good one. The Aussie's volatile. The Euro actually is getting some good movement as well. So Euro Aussie, I'm watching that resistance zone right up around 169 is being a big time top side level. If we don't see this level tested and or hold up as top side resistance, then we're going to see some shifting in this market, a big shift more than likely, and that's going to be sort of based on gold. Remember, gold and Australian dollar showing a high correlation right now. Very, very high correlation. So when you're trading the Euro Aussie, probably a good idea to keep one eye on the gold market just to sort of try to figure out maybe where the next I would say the next cycle or the next wave participation could come from towards this pair. Good stuff, though. You can see the gold market's up about 0.83%, still flat, though, in my view, from 4,500. 4,500, 5,500 is the all-time high. We're down big from that zone. Euro USD, this is a big level that I'm watching closely this week. Probably have a trade idea out. Maybe it won't be today. We're doing the newsletter today, but this will probably be a pair that I look at relatively soon. I think it's going to be a dandy. We're looking at 113.52 to the downside, somewhere in that zone. We've broken beneath the 13-month EMA, which means we're beneath 115. So 115's gone. Now you're right around 114.59. Could easily trade down another 100 pips and get involved down there at 113.52. Watching that closely, very, very closely there if you're interested in trading the Euro USD. A couple of the pairs, very popular right now, the yen. Everybody seemingly is trading the dollar yen. A lot of traders really love the dollar yen because it moves. You know, a lot of Forex pairs, you'll look at them, and it's like watching paint dry. This month, you're up about 2.25% on this pair. The dollar really starting to flex against the yen. I'm surprised. I mean, I was singing a completely different tune just several weeks ago. And for right this minute, 2024's high is big, 161.95. That level, 162, more than likely going to set up is at least decent short-term topside resistance. However, I'm not too blown away by the technicals here. I think that you probably still want to be buying pullbacks until you get to that level, but definitely one that you should be looking at. So right there, 2024's high, right up there at 161.95. That's a big zone. You're going to want to make a note of that. Now, as far as where we're at on the dailies, you'll see the daily, a little bit of a pullback here. Pretty good Fibonacci sequence. I mean, it's not necessarily the biggest trend. We're still inside of our Bollinger Bands, which suggests that we've sort of flattened out for quite some time here in the dollar yen. But this is interesting to me. You sort of had last Friday, pretty good range, 160 down to 159.45. So you had about a 100 pip range. Take a look at what's happened here to open the week. The high is 160.46. The low today is 159.32. We've traded both sides. We've traded both sides of Friday's range, and now we're sort of in sell-off mode. Pretty good losing day, about 0.5%. That's a nice move for a Forex pair. Doesn't really do much when we're looking at commodities and things like that, but for a Forex pair, it's not bad. You may be able to work a spike low to a spike high and have a nice set of levels there. Potentially, we could sink our teeth into 159.32. Pretty good one. What was our low today? 159.32. That's like a magic trick. Nice 25 pip run. So maybe you don't take that one again. That one looks like it's already sort of gone. Pretty good level here at 50%. I'm not interested in 50% right now. I'm waiting for premium entries. 62% would be another one that's absolutely fascinating and one that I would be interested in this pair on the daily time frame. So when you're looking at these charts and you're looking at Fibonacci's, there's a couple of different ways to interpret them. There's actually a million different ways. I do things the way that I do them. And not necessarily the best way. I never said that it was, but it's just the way that I do them. And I love trading 38%, 62%. I consider 50% when it comes into contact with my moving average. So in this instance, we probably could build a case to step up and bid 159s. We probably could build that case just because we're at 158.99 with our 13-day EMA. And then we've also got 158.96 there. So 159, pretty good stuff. Pretty good stuff. I think it's just superstition with me at 50%. I just do not like the level at all. Too many bad experiences. We had a loser not too long ago that was built on 50%. Had a moving average there, had a 50% retracement. It did absolutely nothing. So I'm not really too keen on it. You can see 38% was beautiful. We went right to 159.32 and then bounced. Let's take this down to a 30-minute chart so you can see exactly what happened. I mean, there it is right there. Boom, boom. Rotated higher up there at about 159.64. Really a great scalp for 30 pips. Not bad at all if you got that one. As far as what could be coming our way, though, I'm hyper-focused on 62%. I think that's more than likely going to be the area that we want to target as we roll deeper into the trading week. And it should be an active one. It really should be. 159.32. Good stuff there. I would still keep an eye on it. Maybe a late-day scalp, maybe, but I wouldn't be taking a position there. Let me see. We got some questions to cover. Yeah, we'll be talking gold here in a minute. Ralph H, is gold sitting at a major support zone? Yeah, let's go ahead. We'll take a look at gold here in just a second. I just really, if I haven't checked out of the gold market, but I've toned it down. I've really toned it down because it just isn't. I won't say that it isn't something because it is. It's a good market to be trading, and you can trade it each and every day. You really can, but our levels. We've really entered a consolidation phase, so we'll go ahead and look at the gold chart here in just a second. Let me see. Camp, what do you think about the U.S. dollar-yen pairs now that it's getting lower and the BOG is likely to intervene? Well, I mean, Camp, I just sort of covered the dollar-yen, so I missed your question. I guess great minds think alike. I was thinking yen too. Do we think that we're going to get any sort of intervention with the BOJ? Well, you can see what's happening. The dollar's on a tear. And if the dollar does break out, that's going to bring some major problems for the yen because we sort of know that the BOJ wants to cut interest rates and they want to get back into negative territory as soon as they can. But all the hints and all the signals have sort of been hawkish out of the BOJ for the last, 6 months since we had the new prime minister there. So for me, I'm still sort of waiting on edge. I think 162 is going to be a big one for the dollar yen. Probably going to be the area where the BOJ will consider some sort of intervention. And typically they do that with what yield cap curves, I think. They were doing something with yield caps, all sorts of debt instruments. Honestly, it's so complex. The things that the BOJ can do, the things that any central bank can do to influence the currency, it may be that they just take a bunch of yen off the market. They may go through and have a bond buyback program or something. We just don't really know. We don't really know just yet, but I'm interested. I'm watching the yen closely, as are many traders. I've seen some of the message boards around the internet. Seems like everybody's trading the yen right now. So if that's you, stay in there. 162 is big, though. That's a big level for the dollar yen. Lebo, happy to be back. Haven't been here in a while. Yeah, we haven't seen you. It's all right. We've been here. It's always good because a lot of folks will come in and they'll say, hey, they get off on the right foot for the year. A lot of people trading in January. And then I always say, okay, who's still standing by the end of March, by the end of Q1? Really, this is just a key part of the year. And this March, the most difficult March I can remember trading. It's not just because there's a war. It's because of the way that the news cycles are hitting every single day. All right, let's get into the gold market. You can see gold, the bullish line in the sand for me was 3,700. These are long-term levels, monthly chart. Good technicals, though, and probably the biggest negative month we've seen out of gold, maybe. I won't say in history because I don't know, but I do know in recent memory, I can tell you that's the biggest red candle on your monthly chart we could probably find going back 25 years. But that's a big one. You can see you're off about 14.25%, traded right down to 50% and bounced. Now we're reestablished back above 38%, which is right around 44.28, somewhere in that zone. To sort of answer Ralph H's question, is gold sitting in a major support zone? Well, 44.25 is definitely a big-time level. So if we go down to a daily, you can take a look at the daily chart and you say, okay, what exactly is going on here? Well, you're sort of digging in. Went right to that zone, and now we're just choppy. We've seen that. That's the low again today, right down around 44.17-ish, and then the big bounce back up to 45.25. So if you're looking at gold, probably best to be respecting that as downside support. Now, are you right above the downside support zone? Not really. I mean, you're right at 45.25. Okay, you're about $100 above this level, which is fine. There's nothing wrong with that. It's just, do you want to trade it or not? To me, I see a really flat market. I see a tough market to sort of put our finger on. I think most people out there, most fundamental traders, most fundamental investors are looking at gold saying, yeah, I still really like the long side of this market. And I don't have a problem with that. You're still long-term, monthly, above 38%. Okay, that's bullish. The money flying into bonds is scaring the hell out of all the gold bugs. And when that happens, typically you see the big profit taking, which is what we saw these 4 days especially, just an absolute bum rush to the downside before we got a formidable bounce and reestablished back above that zone. So for me, if I was intraday trading and looking for a decent trade maybe tomorrow, I don't think there's anything wrong with stepping up and buying 44.30s. Somewhere in that zone, maybe looking for a real tight scalp, $5, $10 scalp, in, out. The other thing that we need to monitor too, if you're trading spot gold, take a look at that spread. The spread is down to 80. Interesting, huh? That spread has been up around 110, 120, 130 fairly regularly. And right now, just as I'm saying that, it's ticking up 91, 85, 91. That spread is all over the place. And that is because you're starting to see a little bit of participation die down. Remember, those big spreads typically come when there's not a tremendous amount of participation. As there's more participation, more traders in there, that efficiency really locks down, and those spreads typically reflect the amount of bids and asks at each level, right? Well, then when the bids go crazy, that's when we start to see brokers managing their risk. Maybe there isn't as many players in there as there usually is. Right now, you got tighter spreads, you got pretty good players, and you don't have a trending market. So that's not a bad way to look at this, saying, okay, we're definitely flat in gold. No question about it. The last, 5 days, this is flat. This is very flat. So a couple of ways you can look at trading it. To me, I see that as being major support, major downside support right around 44.30. If you want to use some Fibonacci retracements, something like this, spike high, spike low, somewhere in that zone, you can see we broke up above this 38% and then maybe 62% of the top side, 46.82-ish, maybe pretty good resistance, maybe a short scalp from there, 46.840, definitely a short scalp from up there. But for right this minute, we are loading up. We are loading up. This market it feels like it's coiling up, and we're either going to get the big move to the top side, but it's going to be really tough. It's going to be really, really tough to go too much higher when you see the U.S. dollar trading, the U.S. dollar index trading up above 100. That suggests that people are favoring the bonds, they're favoring the dollar over metals, and that is indicative, 100% indicative of what we're seeing right there on that gold chart. Flat price action. Flat. So get ready for a move. Which way does it go? Beats the heck out of me. One thing we do know, I was talking in a meeting earlier today, and I said that today's open, it was a strong open on Wall Street. I said, it's fickle. I go, these markets are fickle. They are heavy. US 30, case in point. Take a look at where you're trading on the US 30. Monthly chart, spike low, April panic, right? Last April, tariff panic of 2025, right up to those all-time highs above 50,000. Now we are banging on the door of that 38% level. Remember, we've only got one more trading day in March, and then we flip the calendar over to April. And once you flip over to April, what are we talking about? Fresh month, fresh range, fresh trading. Do we have fresh market drivers in April? You're still going to have the Iran war, and some developments they're coming in that war. We're going to talk about them today. I feel like the case for ground troops is getting to be pretty much a foregone conclusion now. We're going to talk more about it here in just a second, but this is a huge level. 45.125. Definitely something I would be looking at here. Let's go to a daily, and you see your daily chart. What do you have? No joke. I mean, we had just this really tight trade, came off hard there. And then last Friday, what happened? We went down and we nailed that 38%, opened on the bull, good bounce there, and now it's starting to really feel heavy for the US 30 and the Dow and US stocks in general. Let's go ahead and check another chart, and then we got a few questions here to answer. But this 5,200 SMA chart is hugely important. Now, that's a Great Britain pound USD. You can see you're sort of in bearish territory. We may have a death cross setting up there. But what I'm interested in right now is U.S. stocks. U.S. 30 trading way below the 200-day simple moving average. That's very bearish. That's very bearish. When was the last time it happened? It's right in here, tariff panic. This is new. Sentiment is definitely shifting. Our technicals show us this. The one I'm interested in is the U.S. 100. Now remember, when the 50 crosses under the 200, that is called a death cross. Major, 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 major bearish indicator. That's one that'll be all over CNBC, Bloomberg, you name it. Everybody's going to go, oh no, a death cross in the NASDAQ. Will happen. US 500, the situation's not quite that dire, but you see that downward trajectory. It looks like that's developing too, and the US 30 is in a little bit stronger position. But this US 100, we could get a death cross here relatively soon. We really could. I mean, we're coming right down. You can see the top side, we're looking at about 24.8, 858. Down here about 24.4, somewhere in there. This looks like it's going to develop unless we start to see some major action out of the NASDAQ, and it's just been bearish, bearish, bearish. Why do you think the NASDAQ's getting hurt worse than the others? Because the AI boom is in jeopardy. If you cut off the energy out of the Middle East to the rest of the world and bring about an economic contraction that's energy and inflation driven, your AI boom is going to grind to a halt, at least temporarily. So we're watching this closely. I think that it's an interesting type of a dynamic, but for me, I'm watching the death cross in the US 100 closely, probably for the next several weeks. Could set up in April, and that's going to bring a lot more sellers to the market. US 2000 is actually holding up the best. The Russell 2000, this one's holding up the best out of any of the indices, just barely beneath that 200-day simple moving average. The Russell's a lot more volatile, but you could see that situationally, you had that golden cross develop back in August. You had the death cross right here in our tariff panic, and now you sort of bounced up. Things are taking a turn, guys. Things are definitely turning here to the bear. How deep do we go? It's been really tough to keep equities down for the last several years. I mean, really going back to COVID, it's been very difficult to keep equities down. And to me, it looks like the game is changing, and it's going to all depend on this war, and it really is. There's no two ways about it. So stay frosty if you're in those stock markets, because it's going to get difficult. It's going to get difficult moving forward because we've got some market drivers that can really shake up the world. That's for sure. Let me see, Tina. Yeah, tough market. It really is a tough market right now. We're not going to sit around and lick our wounds and be, oh, the market's tough, because there's opportunities there. There really are opportunities there. But as far as what can we really do, like say on a Monday, especially with this much news out, it's a tough proposition. So you just got to stick with it. Watch your risk. Make sure that you don't let one trade clean you out. That's not what it's about. Let's see, pack up. Gold seems to have respected the 44.20 area. It's a big zone, 38%, 44.28 on the monthly. It's a big zone, so keep an eye on that one if you are trading gold. All right, week 14, 2026, Iran war, week 5 of the Iran war. This is a big week. Remember those initial projections from Trump when he made the announcement. 4 to 5 weeks is what they were looking at. 4 to 5 weeks is what they were looking at. You hear me? You hear what I'm saying? If it goes past this week, then you will officially be running long and running over. And that means that everything the administration's been telling you about being ahead of schedule, it's all a fugazi. It's all a fraud. So I think that projecting when exactly a war could end, or when exactly you could wrap up combat operations with any degree of success or victory, you're going to see that being almost impossible to predict. This thing could go, right now it looks like they're digging in. They're getting ready for ground troops. It could go another 100 days. Or it could be over by Friday. Nobody knows. I mean, this is a head scratcher. I don't know. I just don't know. I think that so much disinformation out there from all sides. I'm not sure anybody really knows. So we got to focus on what we know and what we can do, what we can quantify in front of us, and how the markets are likely to react given XYZ scenario. All right, week 14. Today is the Iran war. We had a couple T-bill auctions, too, we'll talk about. Tuesday was a CB consumer confidence, big number. Got a feeling that confidence is fading a little bit. That's going to be a big number tomorrow. We're going to go ahead and recap that one for you on the final trading day of March. Wednesday, retail sales. I'm not really too blown away by retail sales, but we will be watching it on Wednesday for signs of recession, signs of reduced consumption. Remember, the United States consumer-based economy, as soon as the sentiment falls, as soon as consumer confidence falls, then consumption itself falls, and then you get into the recession talk. Big-time scenarios coming our way, no question. Thursday, initial jobless claims. I don't know that it's going to be the biggest market driver in the world, but we'll take a look at it. And Friday is U.S. non-farm payrolls. It's NFP time again. It's also Good Friday here in the United States. I don't really know how much action we're going to see on the markets, but they are scheduled as of right now to drop U.S. non-farm payrolls on Good Friday. We will be here. I will be here with bells on to cover that live, so be sure to join us for NFP Live on Friday. Truly a big event, and I think one that everybody's watching, especially after how horrible the last jobs numbers were. News of the day are going to be your 3 and 6 month T-bill auctions. 3.620% for that 3 month, and then the 6 month up at 3.60. You can see that those actually are falling yields a little bit. That's a surprise given our current dynamic. Those treasuries are actually down a little bit week over week, which is an interesting sign. We got to talk a little bit about the Baker Hughes and oil right now, because oil is what's making sort of everything go. Baker Hughes rig count. This one dropped last Friday, but we do need to cover it. Oil rig counts are sort of, I won't say that they're subjective because they're really not, but how to interpret the data is subjective. A lot of folks, I was reading people that said, hey, this is a strong oil rigs number. This is a good solid one for this time of year. And I just look at the history and I shake my head and I go, that's complete nonsense. And then you hear other folks that say, well, all of our infrastructure is already built, so the production doesn't need to have to come from new exploration and new oil rigs. I've heard that one as well. I don't think I'm believing any of that. Remember, Baker Hughes is just a firm that goes around and count the oil and gas rigs, and they try to keep this running as a weekly figure to really illustrate where the U.S. production could potentially be. And we've seen massive builds in supply over the last several weeks, but the rig count numbers are really low. They're really low, and with oil at $103, that starts to bring all sorts of investment off of the sidelines to get involved in these wells, to get new rigs out there, to start drilling. And that really is what we saw back in 2013, 2014. I was there. The rig counts were off the charts compared to what they are now. I believe the rig count back in 2014 for this time of year, 2013, was about 1,300. This is only 400, a fraction of that. So the oil rigs in the United States decreased. How's the number of operational rigs decreasing? Goes from 409 from 414 the previous week. It's only 5 rigs, but still that's a drop. With oil in the situation that it's in, shocked to not see this number really spike. Absolutely shocked. In any case, you can see reaching an all-time high of 1,609 in October of 2014 and a record low of 98 in August of 1999. So 1999, sort of the peak right before the tech boom, really low, much lower fuel prices. That was before Afghanistan and 2001, 9/11 and all that jazz. But as far as 2014, I believe I was boots on the ground in 2013 there. In the summer of 2013, and I saw exactly how big the expansion was, and it was massive in the Bakken oil fields over in the Dakotas. Now you're very, very low. You've got very low rig numbers. What does that mean? Well, I mean, it means that you're not going to be taking as much new oil out of the ground. Established wells are going to be producing and probably ramping up production, but I would think there would be an incredible impetus on exploration right now and development. So we're not seeing it. That's going to be one to watch. This was our market profile from last week. You remember the shenanigans, the insider trading stuff of the 23rd of March, where you had sort of a value area up here right around 100, and then the market plunged on Trump's Truth Social tweet, and then the market base is here, and then the rest of the week we just claw right back in. You can see this is our market profile, our time price offering. You can see that those really rallied and filled in what we knew was going to be filled in, and that was that weak chain. So you're always looking for holes in the market. That right there was filled in perfectly. So now what are we doing? Well, we're established back above 100. You can see today, let's just sort of blow up the action for today here. The point of control at this time of day, that's rock solid. I think that if you had a chance maybe to buy the point of control in the next hour or so, then yeah, you take that trade. 103.60 is where we're printing right now. The point of control, that's where the most volume, that's the price point where the most volume has taken place over the course of the U.S. session. You can see this is a nice normal distribution, and we're pushing highs. We're sort of working on this long tail out here to see if we're going to go higher. This is incredibly bullish. I mean, there's no two ways about it. We went off the board, sort of made that prediction last Friday. I said we're going to go off the board at about 100 and right around 100. So what's happening on each one of these weeks? What's happening? Let's get rid of our time price offering chart here, and let's go back to a weekly. What is happening since the beginning of this war? You can see where the war began. So you're right here in late February. Life's pretty good. Crude oil's down around $66, $65. Going to be relatively cheap going into the spring months. Probably see a little bit of a pop up to 72 or so, then come right back down over the summer months and the fall. And that is over. That is over with. That is over and done. And the reason why is your Iran war. But take a look at what's happening. No matter what is said, no matter what news is coming out of the administration and out of the White House and out of the energy industry, every weekly close it's higher. Every weekly close is higher. So the first week of the war, you went off the board, you closed at about 87.52. The second week of the war, you went off the board, you closed at 96.84. The third week of the war, you closed at 98.23. The fourth week, you closed at 99.64. This is a grinder. It's a rocky road. There's big sell-offs, massive sell-offs in here. But look at Every week you're closing higher. There's no two ways about it. You're in for a major bullish run in WTI crude, especially if the scenarios we're going to talk about in a second develop. They look to me like they're going to, and it's all about ground troops. It's this easy. You're either going to get a ground troops in an extended war potentially. Who knows how that's going to go? I have no idea, no clue. Not a war. I'm not a historian really. I'm not a war tactician. I don't study it. But I do know this, the commitment of ground troops is going to open up some eventualities that aren't there when you just are conducting an air war. That's the first thing. So ground troops, casualties, prolonged war, that means that the strait more than likely is going to stay closed for longer, maybe. If that's the case, your crude oil is going to keep building. It's going to keep building, there's no question. So there's that. Then the other side of that equation is a peace deal. Maybe you get an immediate peace deal. Maybe the Strait of Hormuz is open and people go back to business as usual. Maybe that's the case. I could see that happening. I could see this thing being over just as fast as it started. I could see that. If that happens, what happens to crude oil? It crashes. We've seen the crashes. There's no question about it that this market can fall in a big way. It just all depends on getting the right market drivers and the right news cycle. So right now we're printing about 103.43. A couple of things that you probably should have on your charts. Let's step back to that U.S. oil CFD. You'll notice that the price action a little bit different than our futures, but in essence, it really is the same type of dynamic. You are building, you're grinding. I mean, that's almost like a firefly doji, isn't it? That's not even really a hammer. I mean, look at the size of that tail. That wiped out all the retail longs. It's not even a fair game, is it? In any case, have a good close eye on this high right here. This swing high up there right around at 119.50, 120. That's a big one. That's a really big one. Let's step back into our way back machine on this U.S. oil contract, and let's go to a yearly chart. Have we ever seen anything like it? What's happening right now? Not really. For the month, you're up about 53%, 53.8%. That's massive. You can see that things can come down in a big way, and it can happen fast. But that by far, that might be the biggest. That might be the biggest since the 1970s as far as a rally goes. I mean, these are monthly charts here. This goes back to 2008. This was a situation where inflation. Well, I mean, it was present, but it was more of a liquidity crunch that developed. That right there was a financial crisis, 147. So you're starting to talk about some historical levels that when we reach these levels for crude oil, things are going to get really difficult for the economy. There's no question about it. You know, you're starting maybe to look back here, March of 2022. That's a big one. Keep an eye on that level, 129. So we're not necessarily making history with regards to all-time highs. There's still a lot of room in a lot of ways. There's a lot of room up there for these prices to go even higher. But I remember this. I remember 2008, this area right in here, the trucking industry in the United States was decimated. The owner-operators, the individuals that were running their own trucking companies, a lot of those guys just said, we're parking our trucks because we can't run on $10 diesel, $9 diesel. And that's for sure. Those prices will be passed through to everybody. Especially, and it's going to be worse in Europe. I've already talked to folks in Europe. It's worse in Europe. The fuel situation is very serious. This is a very serious situation. Remember those SPRs. Remember the strategic reserves they released. That's already 3 weeks ago. We know we don't have that much oil. This cannot go on indefinitely. And that brings us to our next point. And then we'll get back for some technical analysis here. But what's going to happen next? Well, Trump's back on the microphone, and he's issuing some very serious threats towards Iran. And you're talking about Rubio tells Al Jazeera Trump prefers diplomacy. They want to cut a deal. It's not clear that anybody wants to deal. Live update. Trump threatens to obliterate Iran's energy sources, calls Tehran calls U.S. plan unrealistic. Trump renews energy site threats. That goes back to our energy war narrative. We've talked a lot about that. There's also talks about hitting desalination plants. That is the water supply for the Middle East. I mean, it's just a really, really tough situation that's going on here. Let's go ahead and take a look at our market odds, because this is probably the most important thing that we could even look at right now. Let's see, and some close ads, of course. U.S. forces enter Iran by March 31st. That's only tomorrow. Doesn't look like that's going to happen. People don't believe that. April 30th, 69%. That's up 27%. People, the wager, not necessarily the bettors, but the prediction market participants, I guess. That's a nice way of calling them bettors. 69% say that's going to happen in April. 76% chance that happens by the end of the year. So this is huge. When we look at this stuff here, it really does look like you're going to get a U.S. invasion on Iranian infrastructure. Let's go ahead and step back and take a look at a few of these other markets. Will the regime fall? That's not going to happen this month. U.S.-Iran ceasefire. When can we expect maybe a ceasefire? It's not likely. It's not likely in April. About 50-50 by May, about 70%. So people don't believe that the war is going to go on, indefinitely throughout this year. How about this? How many different countries will Israel strike Karg Island no longer under Iranian control? This is interesting. 30%. A lot of folks believe that invasion's coming on Karg Island. I don't know anything about it, but I do know 31% believe that's the case. 40%, 44%. This is one of those areas that they believe that the experts out there, the war strategists believe that the United States is going to invade and hit, and that's going to be Karg Island. It's either going to be Karg Island or on the Strait of Hormuz to try to free that up. Trump announces the end of military operations. It looks like that this war is sort of being priced in as going through the next month, through April. 39%, about 68% believe by June 30th. So this is absolutely huge. This is absolutely huge. So what all this stuff suggests is that a ground invasion is imminent, and that it more than likely is going to happen, and that the war probably isn't going to be over, at least for another month. It looks like that's what everybody's pricing right now. Now, it can change. It can change at the drop of a hat. It really can. But people are believing that this war is going another 4 weeks. I have no clue. I was in a meeting this morning with a bunch of folks, and they were asking me, they said, Shane, what do you think? How long is this going to go? And I said, I have no idea. I have no idea. But the way that this all fits together, and it's really important that we understand, the longer that war goes and the longer the Strait of Hormuz is closed, the tougher the energy situation gets globally, the greater chance you have of a global recession and also oil prices. We showed you those weekly closes. It's going to keep going higher and higher and higher until there's a shift in the market dynamic. Something has to change for the prices to come down. That's just the way it is. That's the way markets work. There has to be a fundamental shift for these prices to go and stay down. They sold off to 84, on Trump's tweet saying, okay, we got a deal in place. Now, all those losses, all that depressed oil prices, it didn't last but about a day. Boom, right back up. Right back up. That tells us exactly what we need to know about the market sentiment. Everybody's bullish, and everybody in the market right now is skeptical that the war's going anywhere. So how does that affect anything? Well, I mean, you got Jay Powell weighing in. Jay Powell, he said this earlier today. Powell says Fed can wait and see on how the war affects inflation. He's not going to do anything. He's not going to raise rates. He's not going to cut interest rates. Here's the summary of what Powell said earlier today. Higher energy prices not yet creating a hard choice. He says he doesn't have to worry about it just yet. Inflation's running above target, and Fed is watching inflation expectations. Powell has also pointed to downside risk in the labor market. So what is going on here with Jay Powell? What's happening? Let me sum it up for you. He can't cut interest rates. They're not going to cut interest rates because the Iran war and the higher energy prices threaten their inflation target. It means that inflation's starting to trend higher above the baseline 2% that we never got to. Okay, that's the first thing. So you've got inflation's persistent, and now pointing to the downside risk in the labor market means, well, I can't hike interest rates because it's going to kill our labor market. So you're in a situation where labor's starting to fall a little bit. We've got NFP Friday. We're going to take a look at the latest numbers, but all of a sudden labor's pulling back, and then you've got a situation where all of a sudden inflation's moving higher. What is that? It's stagflation, and it's what the energy quotient to this equation or this scenario really is. It drives inflation. It hurts your economy. Stagflation is going to be a word we're going to hear a lot of in the coming months. And the impetus to get the war over as fast as you possibly can is there. So when we're looking at something like U.S. oil, the first question is, Shane, what do you want to do with it? I'd say bid it. Bid pullbacks. Bid pullbacks. I still think we're going to, at some point, we will revisit that area down there at 68, but it's not coming anytime soon. It's probably not coming until the fall, it looks like to me now. Could happen, I guess. But 38% is right there at $95. That is a fantastic bidding zone, and probably one that you may get a shot at here. May actually get a shot at that later this week. So we're going to be watching that closely in U.S. oil. Natural gas, I have to cover that as well. A lot of facilities are getting hit in the Middle East for natural gas production, especially in Qatar. There was a big one there. I believe they hit one in Saudi too, Saudi Arabia. Yet you've got the prices of natural gas coming down. So we had an actual bid down there from 2025's low at 26.39. That's a huge zone for natural gas. Right now we're printing about 29.26, off 5%, on the day. So if you're trading natty gas, keep an eye on 2025's low. More than likely, you're going to get some bidders step up to the plate from there. Will it drive us significantly higher? It just doesn't seem to be the case. It doesn't seem to be the case. And you would think with a war raging and a lot of that LNG, I believe that's a couple of the largest LNG plants, liquefied natural gas plants in the world, are located in the Persian Gulf. And it doesn't look like that the threats to this energy infrastructure is doing anything to boost prices. So natty gas is in decent shape, bearish shape, as we roll into week 5 of this war. No question about it. All right, everybody, let's see. Great Britain pound, Australian dollar was a banger. We can go and take a look at that. Interesting. Still sort of looking at topside resistance up there. I think that we're going to have a pretty good shot at it. I really do. Pound Aussie, 38%, 195-ish. Could be a fantastic trade. I think that might be a pretty good one for a little bit later this week. It just really depends on what happens in the gold market. Gold's been relatively flat as well, so it's going to be a pretty tough one. Eli, what about helium? Well, helium's one of those things that I don't know much about. I know that it's a major product that is coming out of the Middle East. We know that. Major one. As far as what does that do? Helium's big in chip making. If you don't have helium, you can't make chips. So once again, that's another factor, Eli, that's driving the NASDAQ down a little bit. Marvel, good to see a Marvel welcome. So it's a good point about the helium. How long have you been mentioning stagflation? I've been talking about stagflation probably for the last 6 months, Eli. I believe it's here. I believe it's been here. I think that's why they shut the government down last fall. One way to avoid admitting how bad the jobs market is just not to report the data. And, it's really not a conspiracy theory either. Go back and take a look at those revised NFP numbers from when the government was closed. They're horrible. They all got revised down. We know inflation is far above where the Fed wants it to be. They're just sort of accepting that now. They're saying, well, we're above our target. We're above target. You're way above target. So now what do we have? Now, what happens if inflation starts kicking way back to like where we were right after COVID? And then all of a sudden you've got that labor market contracting due to AI, due to maybe a pullback in the energies, exploding energy prices. I think stagflation's been here for 6 months. No question. Let me see, Lebo, how is this affecting Bitcoin? Yeah, we'll look at Bitcoin. That's a good one to end on right there. Powell doesn't look like he's going anywhere. He said he wasn't leaving until they drop the charges or that investigation's rectified. Interesting. It's interesting. All right, 2 markets left, and then we've got to go ahead and sign off. Corn. I'm not much of an ag trader, but we understood a lot about what was happening, and we called. If we get an inside month there with corn, bid it. Bid it, and you can see there's your break. There was your big bullish break in the corn markets, and it really started to develop over the past several weeks. Not bad stuff. You can see there was sort of your big move, and now you're sort of trickling higher. I think that corn coming off a little bit today, but you could build the case for strong corn pricing this year. Why? Because it's coming into planting season. It's coming into planting season, and the fertilizer is not flowing out of the Persian Gulf like it needs to. So the farmers in the United States are already up in arms because they're saying, hey, listen, we got to plant. And the fertilizer is expensive. And we're talking about the liquefied fertilizer that really is featured in the corn. Corn boosts corn yields through the roof. And without it, it gets to be really difficult to do much of anything yield-wise. This is something we have to watch. So weekly, you can see we had a nice spike there and then sort of a pullback to open this week. If I'm looking at cash corn, I'm still very bullish, but we could get a washout. We could get a little washout here before we rebound and go higher. It's all about the fertilizer now and what exactly the farmers are going to project for their yields. The next couple of USDA, WASDE reports are going to be huge if you're trading something like a cash corn, which nobody probably is, but that's okay. That's okay. It's good to know a little bit about everything. sort of a jack of all trades. Well, sometimes it works, sometimes it doesn't. Bitcoin. What about Bitcoin? It's flat. I mean, 66,000. Okay, I get it. You're like, Shane, what are you talking about? I mean, tremendous sell-off. That is just like that. That's fighting in a phone booth. I mean, that really is for something like Bitcoin. Take a look at this. And this really does seem to be the pattern, though. And we'll point it out here. It's fairly obvious, but you can see right there, look at this sideways period of weekly trade. What happened after that? Eventually, you broke out. Compression, 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 break. And then right there, you're coming off big compression, 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 compression. You guys sort of see what I'm getting at here. Are we going to go lower? We could easily go lower. Spike high right there. Work to that spike low. This big, basically a 4-week move. Huge move from 98 down to 59. I mean, that's epic. We failed at 38% of that level, which is right around $75. $75 per bit, or excuse me, 75,000 per Bitcoin, 75. That's absolutely staggering because if you reject that level, what is effectively set up now? You've got that L formation. An L formation is bearish. It means that prices are down. They haven't been able to retrace up over 38%, and more than likely you're going to trend further south. This is a pretty tough situation for Bitcoin. If you're a Bitcoin bull, it doesn't look good. It really doesn't look good right now. Now, we did have a huge level that I've been pointing out forever, and maybe we get it this week. I've been talking about it seemingly forever, so I'm almost bored with Bitcoin at this point. I know a lot of you trade Bitcoin in a lot of crypto, and that's great. Good for you. Do well. Make that cash. Stack those chips. But yearly chart for Bitcoin, we had 58 buys in the queue for a long time, and I think you might get a shot at that. 58,000, somewhere in that zone, maybe 58 and a quarter. Should be the intermediate term swing low here for this bottom of this move. I would be surprised if we trade beneath 58, but if we do, and that's a big if this market falls away because maybe things get really sticky in the Middle East, 39, we got the 13-year EMA there. 13-year EMA is at 38.9, and you've got a 78% retracement of the last 4 years range right there at 38.9. I mean, that is just big. 40,000's big. 39,000's big. That's for sure. Let's see, Eli, knowledge is power. It sure is. All right, everybody, I've gone on long enough today. We covered quite a bit, though, quite a few markets. Keep a close eye on what's developing in the Middle East. That goes without saying. I think that is the number one market driver. It's not even close. Absolutely not even close. If you want to trade anything that we talked about today, head on over to Switch Markets. Bring your trading ambition into focus. Customer support's really a strong suit over there. If you have any questions at all for the team over at Switch, just go over there, click on the live balloon. You got frequently asked questions guide, or you can get somebody dialed up relatively quickly to help you out with your trading experience. All right, everybody. Oil up. Stocks are weak. The dollar's strong. This looks like boots on the ground anytime. I think that more than likely going to be this weekend. Who knows, though? The troops are in position now. There's 50,000 troops in the region. You're looking at about 20,000 of those are combat troops. There's also been amphibious marine units sent in. The paratroopers, we talked about the 82nd Airborne, they got sent in. A lot of the scuttlebutt, it's tough to keep a secret nowadays, but a lot of the scuttlebutt from the folks that are active military, they tend to believe they're being mobilized. We will find out. All right, let me see. Eli, I like 45 for Bitcoin. Life gets pretty tough underneath 58. Bitcoin, if it breaks beneath that 57.5, 58 level, look out to the downside. All right, everybody, that's a wrap for today. I've gone on long enough. Have a fantastic trading day. If you need anything, head on over to howtotrade.com. You can always find me there. Send me a private message. Say hi. If you have any questions at all, be sure to reach out, and I will do my best to answer. We also will have our Switch On Picks of the Week video out. That'll hit before the London session opens tomorrow, so you're going to want to check that out on over at Switch Markets on YouTube. All right, everybody, that's a wrap. Have a fantastic trading session, and as always, trade the action well, and we'll talk soon. See ya.